Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hey, Bruce. Welcome.
Happy Monday, Tom. It's great to see you. It's been an interesting week we had last week, and I think we should talk today a little bit about what happened with the Fed rate. What do you think?
Yeah. I think you know what. I've got three things that I wanted to go through with you today. Obviously the Fed thing is number one because that's gonna. That's on everybody's mind. It's in the news, right? The other thing is I've got a good Central Florida market update, pretty positive, I think. And then some tips. I got a tip for you. And then I think we're going to talk a little bit. I've been getting hit a lot with this. We're going to talk a little bit about credit repair.
Okay.
I think
And we also have a class coming up on Leapfrog for investors that would like to invest in real estate, and we're going to talk a little bit about that. So let's get started right away. So first of all, we all know the Fed raised the Fed rate. Okay. And the Fed rate went from 4.75% to 5%. Now, that number really doesn't have anything to do with you and I. It
Wait,
has
that doesn't mean I can't get a mortgage at 5% now.
Yeah, you can't get a mortgage at 5% now.
Okay.
Matter of fact, that's what banks would get their money from if they are exchanging and trading money back and forth with the Fed or with banks. That's their cooperative rate. But you and I see a different rate, and that's called the Wall Street Journal Fed rate or prime rate, which went from 7.75% to 8%. So now we can really expect that the Fed rate is truly at 8%, not at 5%. We'll never see the 5%. That's the wholesale market,
Got
and that's what banks are paying. And it's interesting. This is the ninth consecutive hike that they've made. And I look at that and I know that people look and go, "Oh my gosh, interest rates are rising. What's going to happen to the market? What's going to happen to housing?" But it's interesting that just because the Fed raises the Fed rate doesn't always mean, Tom, that interest rates on housing are going to go up. Matter of
Right.
fact, we've seen an adverse effect from time to time when the Fed raises the Fed rate. And the reason for that is the purpose of the Fed hike. The purpose of the Fed hike is to slow down the economy, right?
Mhm.
So
Sure.
the Feds, and that is a deflationary act that they have. So since it's deflationary, it can sometimes have an adverse effect on interest rates, which is a positive effect, meaning that interest rates, instead of going up when the Fed raises a Fed rate, they actually can drop down just a little bit. And we're expecting that to happen. As a matter of fact, when the Fed raised the Fed rate last Wednesday, we saw Wednesday afternoon, Thursday and Friday improve in interest rates. It'll be interesting to see what happens this week. But we saw a surge in market and people jumping into the market. What did you see?
Yeah. I've got a little bit of a Central Florida market update. This is from last week, a snapshot from Friday. That I've got here. Whoa. Um, so you can see that we had almost 1,000 houses get listed,
Right?
and a little over 900 get sold. Right, it's only a 40 house spread between new listings and sold, but the second week in a row we saw more houses go pending. Right, so when a house goes under contract, it goes pending, and then
Right?
it's usually 30 to 45 days before it closes on average. Right. So we're seeing more houses going pending, which means over the next couple of weeks or a month, we ought to see more houses actually get sold and closed out. So now we did see a lot of houses come back on the market, right? That's a little more than usual. That's about a third as many as the listings. It's usually about a quarter or less. So we're seeing more come back on the market. I don't know why. I can't tell you individually why each one of those comes back on the market, but a lot of them are due to financing and appraisals, right? So,
Well, yeah, I would imagine so. If a or even an inspection, maybe something happened on an inspection, they took it
sure,
off the
sure.
market, made a repair, and put it back on the market. I looked at the number of expireds, at only 48 expireds on the market. I've never seen that before.
Well, that's up a lot. It used to be two or three. So that it's it's definitely a getting to be a more balanced market, but it's nowhere near a true balanced market. But Bruce, I talked about appraisals for a second there, and I know this is on one that we're working on together, right? Um, we had an opportunity where I showed a house to a buyer, and they were excited about it. They wanted to know the best price to offer. It had only been on the market for a day, and when I looked at it, I realized it was at least 25 market
Yeah, you got cut out
contract
just
that
a
was
little.
full price.
Yeah,
Oh
we
man,
lost your sound there just a little bit for a second there. So you looked at this house and you advised the buyer to go full price because you knew it was worth more than what they were paying.
I, I did, yeah, yeah, and we ended up. I think we ended up at 58,000, 53,000
So listen, I
below
don't
appraised
want
value.
everybody out there listening to this to think that you're going to get a house for $50,000 under market value. Okay. This was an anomaly, but I'll tell you something. That's where a professional real estate agent like Tom really comes in handy because he knows the market. And if that buyer would have used their emotion, they may have said, well, let's come in 10 grand lower
Yep,
and miss
yep.
out. And they wouldn't have. But we got the appraisal back. It came in at $50,000 over ask price. We're not going to name the property. We're not going to name the listing agent on that one. But boy, did we get a win on that one.
We did, and for sure. But on the flip side of that, Bruce, what I'm seeing is in some other like outlying markets, like Deltona specifically, parts of Claremont, things like that, like away from city center. I'm starting to see more and more inventory. I'm starting to see it sit on the market longer, and I'm starting to see it go for reasonably good discounts.
So what
So,
that tells us then, Tom, is that we should be guiding these clients in that direction because there's a better opportunity to negotiate, maybe get some closing costs paid.
well, absolutely, and the other thing is, Deltona is. I'm going to specifically speak about Deltona because I kind of noticed the anomaly there over the last couple of weeks. That's a heavy rental market. There's a lot of rental property in Deltona, right? And it may not be where somebody wants to live ultimately their life, but if they want to get into a property and they want to use your leapfrog program that we're going to talk to them about, right, in next month, Deltona is a great place to
A
buy
great
that first
opportunity.
property,
And I
move into
honestly
it.
don't see anything wrong with living in Daytona or Deltona. I think it's a beautiful area. It's
Yeah.
affordable. It's just because it's between that Volusia County, Daytona market and Orlando. So it'll infill. We saw that happen to Claremont. We see it
It
happening
will. It will.
to different segments of the market, even like Winter Haven and parts of Auburndale. These are all filling in and the prices are exploding. So it's a great
They are.
opportunity to get in on an
Yeah.
entry level.
It is a great opportunity to get an entry level. And I certainly didn't mean to knock Deltona, but I think, a lot of people don't people that want a city center kind of place to live, Deltona's not it, right?
No,
Deland's a little better for that, but it's a great market to find that first house, buy it, live in it for 2 years, right? And
and
then,
leapfrog it.
and
So
then leapfrog out. So
So that should leapfrog us right into the leapfrog class that we're going to be holding on April the 4th. So I'll tell you guys a little bit about my history. So as I was developing my mortgage and real estate career, I knew that investing in real estate was the smartest thing to do. I don't think that you should avoid investing in your 401k. I think a diversification is important, but real estate has done better for me than anything else I could possibly have thought about. But I honestly, Tom, I didn't have a lot of money to buy investment properties. I mean, for an investment property, you're putting 20, 25% down plus
mhm,
closing costs. And for the average person, it just becomes a little bit more problematic and it seems unreachable. So I developed a system that worked for me.
mhm,
It wasn't genius by any means, but it worked for me because I didn't have a lot of money to invest, but I knew I wanted to own multiple properties. So I put together this system by which you could purchase properties every year to 2 years. You could go 3 years, but
mhm.
over a span of about 20 years. So this is great for young people. You don't have to be young, but if you are young, this is the time to start. But we get you into a house, you keep it. you rent it, and I'll show you how all of your mortgages are paid off in a 20-year period of time. You got 5 to 10 properties worth between $4.5 to $10 million in
Mhm.
free and clear real estate, producing a monthly income of $15 to $50,000. Now,
Yeah,
who
it's a
doesn't
great
want monthly income of $15 to $50,000, right?
absolutely. It's a great get rich slow program, right? That's the key, you
And
know?
I think that is the key, is it's get rich slow, but
Mhm.
the great thing about that is it's not only great for your retirement wealth, but it's generational wealth. So I put these all in my trust so that my children will get them. But I
Yeah,
put a caveat in my trust, Tom. You know what that caveat is?
I have
They
no
cannot
idea.
touch 1 penny of that trust income until they've contributed 5 properties each. So
Nice,
now
nice.
my children do 5, that's 10
Uh-huh.
more properties, their children do it. You create massive wealth for generations to come. You wanna join our Leapfrog program? Go to webringyouhome.com. It's on the website right now, it's in this video, and register right away. That will be April the 4th at 6:30, live and in person, right near the old Little 500,
Yep,
not too
yep.
far from there.
Absolutely. So, hey, listen, we're down to about 2 minutes. I want to go ahead and touch on credit repair because
Okay.
you know over the last couple of years we've had a lot of first time home buyers, and a lot of them come to us, with dings in their credit, right, or no credit.
Not
That
enough
can be a
credit.
challenge,
Yep.
and so I want to talk about like how much that can impact somebody. Like if I have, and I know you can't quote me rates and all that kind of stuff, but if I have let's say a 50-point difference, right, between what I have and what I can get to in a reasonably short period of time, what kind of a rate difference can I see by actually
Well,
improving my
that's a
credit?
good question because it's gonna be different for FHA, VA, and conventional, and it
Of course.
depends on where you start and where you end up. But I'll give you a brief explanation. First of all, by raising your credit score is going to give you more buying power, a lower interest rate, lower PMI if you're getting PMI. So all those things combined could equal a substantial difference in your payment. It could be anywhere from $50 to $150, depending on what that score goes to. And it depends on the price point that you're looking in. But the fact of the matter is that better credit equals a better deal every single time.
Sure.
And what I do advise, first of all, I will be holding a class on April 6th. This will be a Zoom class. You can go to webringyouhome.com, look at my events page, and register for the credit.
Oh,
This
I
is
can do
for
this one on Zoom.
Yep, we're gonna do this on Zoom. It's
Awesome.
or similar to Zoom. So what we'll do that then, this is open to real estate agents. So is Leapfrog, by the way. Everybody's invited. It's
Yep.
open to individuals that would like to learn how to invest in real estate. But this will be on April 6th at 11 a.m. And I think that you'll find a lot of things that we're going to dispelling. Like you mentioned earlier, the greatest myth is, how will my credit be affected if you pull an inquiry? And to
Yeah.
be honest with you, it's almost non-existent.
I
So
know.
there are
I hear that all the time. Whenever I talk to a buyer, like, "Hey, I need to get your pre-approved." Oh, I don't want somebody pulling my credit. It's going to kill it. Like,
but that's what
no,
they
that's not
hear.
how it works. Remember that car payment you didn't make? That hurt it, right?
That hurt. Yeah, pay
Yeah.
your bills on time. That's what makes a difference. But we'll be talking about collections, opening or closing accounts, inquiries, changes in medical collections, debunking credit karma for Vantage scores versus FICO scores, optimizing credit reporting act, student loan forgiveness. All of these things are going to be covered in that class.
That's
Tom,
awesome.
I cannot thank you enough for this. It's an honor to work with you. You're an amazing real estate agent. I highly recommend, if you are looking to join the real estate community, talk to Tom about business opportunities. And if you're looking to buy or sell a home, he's a great resource.
Bruce, thanks very much. I absolutely appreciate you always taking care of me, and I really enjoy you taking some time out of your day on a Monday morning. I know you're busy, and so taking a little time to talk to me and help me and my customers out. I really appreciate it. I hope you have a great day. I hope everybody out there has a great day, and you can call me anytime. You've got my number right there on the screen, and look forward to helping you get in your first or second home.
Yep. Roger that. Have a great week, you guys. Thank you so much.